Greetings, members one and all of the Salivation Nation. Can silver still serve as a hedge as debt continues to pile up in nations all around the world? Let's explore. Yes, this particular article comes to us from TheStreet.com. It's its real money segment, and it is fascinating. It talks about silver still shining, but can metals truly serve as hedges in a debt-laden United States? Of course, you can also add pretty much every other nation to that, especially considering the latest black swan event that we have been dealing with since March. The spread between spot and physical silver has narrowed in recent weeks as a response to the pandemic adds to an already steep national debt. And speaking of national debt here in the United States, it's over $25 trillion. And we see, and you see me post videos about the silver to dollar ratio. And that is the amount of silver mined per year compared to the amount of M2 money supply printed. And that number is going up tremendously, for sure. Silver, the poor man's gold, has made a nice recovery the past couple of months, with the spot price up about 40% since mid-March. At that time, spot silver was trading at an 11-year low in the range of $12.50 per ounce, although we did notice for a little while it did get well below $12 into the $11 range, which was quite intriguing to see. But it was a completely different story for the actual physical silver, which was trading at a huge premium to the spot price. For instance, a $100 bag of junk silver, which is 90% silver, most of us know, is constitutional silver minted prior to 1965, which contains 71.5 ounces of silver, was selling for $1,475 or $20.62 an ounce, which is a healthy 63% premium to the spot price. That was an assuming you could find any to buy. Crazy the amount of premium on spots on constitutional silver. I posted a video about that as well. The price for that same bag of silver actually has risen another 9% since mid-March, but has fallen since late March, when junk silver eclipsed $24.50 an ounce. However, not surprisingly, the spread between spot and physical silver has narrowed considerably, currently at $1,609 per bag, which is the equivalent of about $22.50 an ounce. It still commands a 28% premium to the current $17.52 spot price. But that's a far cry from what we saw in March. That gives you quite some perspective, because as people were complaining about premiums, you heard me mention that, be careful what you complain about, because it could be that the spot price could normalize. And that's really what it did. It normalized. It's back now to what the normal levels were before the pandemic happened. And premiums are still high, but they've come down too. Are you more comfortable paying $22.50 an ounce with lower premiums, or $20.62 an ounce with higher premiums? For me, I will take the higher premiums any day of the week if I pay a lower price at the checkout. So that's very interesting indeed. With all the uncertainty from the pandemic, investors sought some solace in physical metals. It appears the shortages of physical silver for investors have abated somewhat since March, based anecdotally on availability on some of the dealer websites around. And that's for sure. Supplies are starting to come forth. They're still not completely reconnected and with these supply chains, but nonetheless, it is getting better and it is getting easier to find silver, and the premiums have gone down some. There are still some premiums out there, though. Demand for silver remains strong. The longer-term question, though, about whether silver and metals in general can serve as effective hedges against uncertainty remains. In this case, with a national debt of $25.5 trillion, up nearly $3 trillion since September, and a debt to GDP ratio of nearly 120%, you've got to wonder how this will play out. The pandemic-related economic shutdown has forced businesses to close and caused millions to lose their jobs, and the last $3 trillion or so added to the national debt was a Hail Mary spent in order to try and keep businesses and citizens afloat in order to avoid a depression. But even prior to that, it seems that most of the deficit hawks had already disappeared, and we're seeing that, not only that, but also the behind the scenes with the repurchase agreements that the Federal Reserve is loaning money in between banks at the tune of $500 million in a day. And the author is reminded of a talk given by Bill Dudley, a former president of the Federal Reserve Bank of New York, back in October, when he was asked about the national debt. Seems that there are actually some people left who still believe that the debt matters, just seemingly not enough in our government. And that's on both sides of the aisle. That's right, exactly right. Deficit spending and the national debt is a bipartisan problem. Can't blame just solely one party or the other, or one politician or the other. They're all equally to blame there. I know, but many believe this is not the time to be discussing national debt, with the economy teetering on the brink. The author gets it, but it's real, and as investors, we need to be prepared for the potential fallout. And the precious metals are not the only answer, but perhaps one tool for the arsenal, if debt actually does matter in the end. That's really the question. Does debt really matter? And my guess is probably not. I would wage a bet that it does not, as long as the dollar remains strong. We've been ignoring the debt for so long and contributing to it. It seems like second nature for sure. In fact, here we can see that where the precious metal prices are right now, they're up across the board, only slightly, but they are making their way in a positive direction here, and they will continue to react to what happens in the markets, and also in relation to this pandemic for sure. Gold to silver ratio has narrowed even a bit further here. It's now at just above 99. But, gold is still, I believe, the ultimate store of value, the ultimate hedge against economic instability. And that's what it's about. It's about preserving our wealth in the long run. And gold serves as a way to do that, to be able to protect ourselves. However, silver is a metal that has really been in quite a quandary. It serves two purposes. It serves as an industrial metal, and it is crucially important for many aspects of our daily lives, for sure. And not to say that gold doesn't serve a role in this factor as well, but gold is more treasured. Silver is consumed, it is utilized as a commodity, but it also serves another role, and not only as a commodity, but also as money. It is a hibernating money, is what I refer to it as, and it is starting to make a comeback, I believe. It's been a late bloomer, as is the case, and it has been the case since the last recession and many other times. Silver does kind of fall behind, but it's starting to play catch up a little bit, but just barely. When the ratio falls below 100 to 1, when we're thinking, wow, this is good news, where just a few months ago it was like, oh my goodness gracious, silver is being left in the dust by gold, and now we're seeing it kind of head the other way. How far will it go? I wouldn't even begin to guess. However, as most of us know, silver is a late bloomer, and it will preserve your wealth in the long run. But as to being that ultimate hedge, or being a hedge, because it's not the ultimate hedge, but will it follow gold's coattails? Well, if the past week is any indication, then yes. As that ratio continues to narrow, then yes, it will, and it will preserve our wealth and act as that hedge. And I believe that's what the movement has been doing as of late with silver. It has been moving and catching up to gold, and on a percentage daily gain, it is performing quite well here. And that is something that we should be encouraged about. However, that does not mean that it won't take a few steps backwards. With every 2 steps forward, it may take a step backwards. But as long as we see a progression, we will see. And the physical accumulation and demand that we've seen for physical things like bars, rounds, and what you see here before you, a silver eagle, which is the most liquid and most recognized silver coin on the planet, that is going to be what really tells the tale. If we see that demand continue to increase or stay at the levels they are, but really it's going to probably have to increase even a little bit more as people see the value in accumulating silver as that hedge. If we see that occur, then yes, silver will act as a hedge, and it will be seen as a hedge as people get nervous about the economy in general and about the debt in particular. Most of us in this community that stack and hold silver, and we understand debt. We understand it in our lives personally and in our businesses. That debt is not a good thing, and especially in our state and local governments. These entities cannot print money. The only one who can is the United States of America, here, if you live in the United States or your respective nations. But we have a cushion in the United States. We have the cushion of the premier reserve currency of the dollar. And as long as that cushion remains and there's faith in that dollar, not only for its citizens, but also for other nations around the world and entities around the world, well, debt becomes less and less of an issue. And that's just the fact of the matter. It's not sexy talk, but that's why when myself in 2013 thought that we were pretty close to imploding in terms of the dollar is concerned, and some sort of a reset were to occur, it was an eye-opening experience as we headed into 2014 for me, when I realized that, hey, this thing can go on. They can continue to print money to infinity as long as people have faith in it. But on the other hand, for you and I, we have faith in God, and also in our own ability to be fiscally responsible, to stay out of debt, to do not what the government does in this particular case, and to help preserve against an ever-depreciating dollar by accumulating silver, and to continue to stick it out and toughen up when silver doesn't perform like it's supposed to. Because really, that's the bottom line. Since 2011, silver has not performed very well. In fact, it has, depending on when you bought, it has been an incredibly bad asset to accumulate. It doesn't pay dividends, number one. And number two, if you bought at one particular time in 2011, well, you have lost tremendously in silver. That's why I believe in the idea of dollar cost averaging, by buying less when the price is up and more when the price is low. And you only buy with what you can afford to do so in your budget, paying your bills and taking care of your obligations first and foremost. But it also encouraged people to diversify by accumulating gold as well. Gold, I believe, is the ultimate hedge against economic instability, and silver is a secondary hedge against economic instability during these times, such as we are in right now. So there you have it. Post your thoughts below. Like to encourage you to please rate, share, comment, and subscribe. And I want to extend that multitude of gratitude to you all for taking the time to watch.